Financial markets in Europe this morning are steady, with the UK's FTSE 100 index currently up around about 10 points, while the US Stocks 50 index is only higher by around about 8 points. The DAX in Germany up around about 16 points at the moment. US stock futures are lower. The Dow is down about 40 points, and the S&P 500 front month futures contract is off around about 2.5 points. In the FX space, we have the US dollar and euro currently trading very range-bound and stable, and in the core government space, core government bond space rather, UK gilts and German bonds are tracking higher as we are seeing a bit of a demand for traditional safe havens. Gold, however, is down at the moment, and commodities across the board are a little weaker. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. It is Monday, the first trading day of the week, and we have a lot going on and a lot of things to talk about. Overnight in Asia, we had a relatively decent session, and that's given us a nice little head start on the positive side in Europe this morning. Now, of course, the big news on Friday was the huge disappointment in the US non-farm payrolls report. Expectations were for around about 195,000 jobs to be created by the US economy in the last month of 2013, the month of December, the same month that the Federal Reserve initiated the tapering process of the bond buying program. 195 was expected. Instead, we had a number which was far less, 74,000 jobs only created by the US economy. Now, there was a big driver behind that. One was the seasonal weather effects, which sapped a lot of the jobs creation in the US. At the same time, there was also an issue of a lot less people looking for work in general and looking for benefits in the US, and that meant the participation rate fell lower, and that was the reason why the unemployment rate dipped to about 6.7%. Now, the issue itself was quite sticky for the Federal Reserve. Now that they've just started the tapering process, the big question is that during their forward guidance, they've given these thresholds which will signal tightening monetary policy. So the first few rate hikes or a further reduction of QE that was pegged to the unemployment rate being somewhere between the 6.5% level. At the moment, it's at 6.7%. But we all know that it's very unlikely that the Federal Reserve have a reason to start hiking interest rates just yet too soon, and that's been dictated by the bond market and the general equity and forex markets. Now, the Federal Reserve, with Janet Yellen in place, who starts next month, she has a difficult job in order to beef up forward guidance, perhaps looking at different thresholds, or at least adjusting the thresholds that she's currently given, because the Fed are not ready yet to hike interest rates in any way, and there's going to be more focus on the labour market. Although the number was disappointing on the jobs generation front, on the whole, it is positive that the unemployment rate is now at a relatively strong level. It's at 6.7%. That's the best that we've seen in a while, and investors are taking some heart into that. Today in Europe, there's not much going on when it comes to macro themes. Very light on the economic calendar. This week we do have inflation numbers out from the UK, we have German GDP, and also inflation numbers out from the US, so those will be the key things to look out for. Other than that, there's not much else to say, so I will see you guys tomorrow. Thank you for watching.